Welcome. Hello, everyone. I'm Eric Hilton, former IRS Commissioner for Small Business Self-Employed, and welcome to the Alliant National Series of Tax Country webinars. It is an opportunity for us to educate you on various tax controversy issues. I'm extremely excited to have two wonderful guests here today. Our topic is collection and penalty abatement. And first, I'll say we have Mr. Darren Gio. Darren and I were commissioners together at the IRS and running the small business self-employed. And I probably embarrassed him a little bit by saying that I consider him probably the top expert in the country as it relates to collection matters. He spent 36 years with the IRS, 36 years. Now he's a director of ZMF. He was also an executive within the appeals office for the IRS. He spent a significant amount of time as a revenue officer, has so many wonderful stories
Yeah.
as it relates to how he helped resolve a lot of different collection matters, but also has experience with exams as well. And we have Miss Sarah Husbands here as well. I mean, talking about someone who's hit the gamut on a lot of different areas, from looking at compliance issues within the community to now being looking at compliance issues with the IRS. He went from being a bail bondsman, owning a company there,
Yes.
to being a revenue officer, to also now a tax attorney. So Sarah is one of our senior tax attorney at ZMF, has an extensive amount of experience as it relates to collection, has an extensive amount of experience related to liens, levies, and helping taxpayers, small and mid-sized businesses on penalty abatement issues.
Yes.
So we are extremely excited to have and speak with you today. This is just one of a number of issues that we'll be bringing forth to you. So let's start off. So Darren and Sarah, we've seen a lot of changes over the years with the IRS, especially since we've left, and we know the resources are down. What is your sense of the landscape within the IRS, Darren? Let's start with you first.
Thank you, Eric. And thank you for joining us, everyone. I mean, clearly, when you think of the Internal Revenue Service, its middle name implies collection, right? And historically, the vast majority of the enforcement revenue that is brought in by the Internal Revenue Service happens from collection, about 80% or so, 70 or 80%. And the vast majority of that comes from those collection notices they send you. They cost less than $1 a piece. It's an incredibly efficient process. It brings in the majority of the enforcement revenue annually at an incredible return on investment. So it's no secret that both the Secretary and the Chief Executive Officer have been commenting lately about the limited number of priorities they're really going to focus on for the Internal Revenue Service, and among them are collection, and in particular, how they plan to leverage artificial intelligence to further enhance how they can enhance tax administration with fewer resources.
To piggyback on what Darren just said, yeah, the world at the IRS collection truly has changed recently, as you all are familiar with the reduction in force. They've moved a significant amount of collection to the automated collection system, which is just a quick way for them to start collecting and pursuing balances and assessing balances, sometimes before the taxpayer is even aware that there was an issue. They've limited the processing time for exams, and they have streamlined their collection process to where taxpayers are just being blindsided by notices before they have a true opportunity to protest.
So DMF, we've seen quite a bit of an uptick as it relates to collection issues. Darren, Sarah, what are the issues that you're seeing for medium and small size businesses as it relates to collection?
So one of the things that we're seeing from medium and small sized businesses, quite a bit of it, is the need for some sort of repayment plan without a notice of federal tax lien, without a public tax lien filing. Many of our clients clearly have licenses or clearances that are dependent on being free of judgments or a lien being filed, and that could be a little tricky because the Internal Revenue Service wants to be a secured creditor, And without that filed lien, they're not a secured creditor. So we've been working closely with them and been quite successful in securing payment arrangements up into the millions of dollars even for medium and small businesses without a lien being filed, by making a really cogent case for how the lien will be detrimental to the IRS being able to be paid at all, in which case we've been able to get payment agreements where there's no lien unless they default the agreement. In other cases, there's so much money involved, the taxpayer, we're able to do something, it's a little complex, but we're quite efficient at it, negotiating collateral arrangements, either a collateral mortgage or a bond, a surety bond in lieu of a lien, where the government is secured as a creditor and there's no notice of federal tax lien filed. So those are a couple of the things that we've been able to do. The other thing that we're seeing quite a bit of are businesses that are really reliant on federal payments. So think of healthcare, the healthcare industry, Eric and Sarah. We're seeing those, right? They depend on Medicare payments that come in as a primary source of revenue, in addition to federal contractors of all sorts we're seeing, whether we're talking about subsidies or grants or direct federal contract payments. The rules the IRS has for businesses that are federal contractors or healthcare providers are very, very strict. If they fall behind on their taxes, they could find themselves caught up very quickly in a process known as the Federal Payment Levy Program, where they get their appeal rights about the same time as the IRS starts seizing the funds that are due to them. So it's really important that we get involved early in those cases.
Unfortunately, we've also seen a real uptick in penalties that are assessed erroneously because maybe some information is missing on a return or on like, for example, the Affordable Care Act. Businesses have to submit these 1094 forms, 1095 forms, and may have some misinformation or a missing code, and it can create a $400,000 or $1 million liability quite quickly. And I really like to get in there and advocate for those taxpayers, because those clients are people who really haven't done anything wrong, and they're being assessed a collection against by the IRS against their businesses. It, as you said, Darren, can result in a quick lien or even levy action. And so we got to get in there right away, and we got to get in front of the IRS and get a stay or a pause on that enforcement action to prevent those levies and liens from being generated, in particular in situations where the client just doesn't deserve it.
All right. I mean, we had one client recently, just to give you an example. This client came to us from another firm, and they had received 2 notices. So businesses that owe back taxes to the Internal Revenue Service don't get typically several notices. They just get 2. They'll get a first notice of balance due and then a final notice of intent to levy. And what happens is, if there's not a response to that within 30 days, which happened to our client, the government knows systemically that they've got federal contracts, and it immediately, at the end of that period of 30 days, notifies the Bureau of the Fiscal Service that they have a tax indebtedness. And so the Bureau of the Fiscal Service offsets any amounts due to that client and sends that money to the Internal Revenue Service. And they get that simultaneously with their rights to appeal. And under the Federal Payment Levy Program, filing a collection due process appeal is not going to be sufficient to get that levy released. And so what we were able to do was work with the client, really go through deeply all of their correspondence, their back and forth with the IRS, and figure out that, you know, they responded within a couple of weeks to that second notice. There should not have been a levy of their federal contracts. And we're able to work with officials at the IRS who took the time to go into their case and discovered, yes, and agreed with us, the levy action was premature. Literally within 10 days, we got them to agree to that in writing, and we're able to get $700,000 plus for this business, which was critical for them to operate and pay their employees' wages.
Now, it sounds a little complex, but I mean, it's very interesting. So, Darren, with that in mind, aren't you being called in as an expert witness on litigation as relates to collection now?
I have been. So we've got criminal and we've got civil matters, civil judicial seizures of property, of residences, also criminal cases where collection has determined they think there are badges of fraud, and they've secured an indictment from the Department of Justice. So I've been able to help other law firms with really dissecting, going deeply into those cases, and looking to make sure that all the proper procedures were followed, and that if the case really warrants criminal action or a seizure action if it's civil. And we've been very successful in getting indictments. In one case, we got an indictment dismissed with prejudice, and we're able to get seizures aborted.
So, Darren, you've been getting called in on a lot of litigation matters, appeals matters. As an expert, you kind of explain some of the things that you've been working on.
But thank you, Eric. It's been covering the gamut. I spent 14 years of my career at the IRS in the Independent Office of Appeals. I was actually an appeals officer, so I'm very familiar with that work. And I've been brought in a number of issues: examination, collection, post-appeals mediation, also just routine conferences. But we just had recently one, Eric, and it's timely because of some case law, the Kwong case that I'm sure our audience is familiar with. Just in the past month, we had a taxpayer millions of dollars in late filing penalties based on reliance. And reliance is almost dead on arrival because of the Boyle Supreme Court case from 1985. But we did a deep dive, our team did, and found some case law that was actually more on point than the Boyle case. And then right about that time, the Kwong decision came out. And leveraging those court cases along with the Kwong case enabled us to get an over 80% concession. It's several $1 million back to our client in his pocket. So very happy to help in the appeals area.
Now, you've also helped quite a bit with ERC cases from a collection matter. You want to speak on that a little as well?
Well, here's the thing, audience, ladies and gentlemen. With the employee retention credit, where there's a clawback, where the business has already received the claim, if the government later decides that they want that money back, they're not going to offer you the regular examination process. Instead, what you're going to get is you're going to get a notice of balance due, and then you're going to get a second final notice, a warning of intent to levy, to seize. And the government, the IRS's position is your right for an administrative appeal will be given to you in the collection due process arena, which means you have to wait for the scariest notice the IRS gives you, the one after which 30 days later they can seize anything and everything. And you have to wait until you get that notice and ask for an appeals hearing where you can raise the underlying liability. So making sure that clients feel well represented and comfortable, basically holding their hands to the edge of that cliff so that they can get their right to say, hey, I deserve this ERC credit without enforcement happening is one that requires great deftness, and we're skilled here. I know Sarah is as well at handling those cases.
Now, Sarah, you've been able to help out with trust fund recovery. So can you explain that a little bit?
Yeah, so especially for our businesses who had some issues with ERC, maybe there was a clawback or even a voluntary disclosure program that they went through, we are seeing an uptick in this trust fund penalty being assessed to these businesses, and it's really just improper. So we have gone to bat and fought hard to get several of them basically removed, dismissed, disallowed, and abating these penalties to zero by showing that the client was just simply not willful in the non-payment of the employment tax. It was just there was a over with the ERC filing or some issue with that, and it created the trust fund penalty assessment, but the trust fund penalty assessment was erroneous, and we were able to get it reduced or removed.
Yeah, that's great. I mean, that saved, so much money.
Oh, millions.
Billions.
Yes.
Millions.
And this trust fund penalty is not just assessed to the business, it is assessed to the individual owner of the business. So it's very serious.
No, that is definitely serious. So, it's great to kind of hear about that. So IRS penalties can add up pretty quickly, as we know. I mean, we here collectively, we got almost, 60, 70 years of experience here. So as you talk about is that those penalties, add up pretty quickly. Talk about how you and your team has helped addressing some of these penalty issues. Let's start with you, Sarah.
Well, sometimes it's really simple. It can be just a basic correction, but it's the challenge is getting to the right person. So we help the client to navigate through that automated collection system where when they call the IRS, they're dealing with a different person every time. we're able to streamline that process and get to the right person very quickly and say the right terms and explain the background in what I like to call IRS speak, which is what I learned when I was a revenue officer. So we like to use IRS speak to get the point across and find it to be very effective. Sometimes we do have to file forms and make more of a formal protest or a formal request for abatement, but we have had a lot of success in abating these penalties.
No, it's fantastic. So, Darren and Sarah, I mean, this has just been extremely informative. Any final thoughts for the viewers as it relates to small and mid-sized businesses, for collection issues?
I would make this point when we ask whether collection is really going to be a priority today with the CEO and the current Treasury Secretary, and I would simply say, look at the shutdown, the longest in American history that we went through in October. All of the IRS civil enforcement employees were furloughed, with one exception, a very notable exception. It was the automated collection functions.
Yeah.
The most prolific and most efficient collection apparatus on the planet, basically. That continued to operate. And IRS continues to operate toward integrating artificial intelligence, and this is super important. Collection operations for decades has been using advanced analytics, but it takes months and years for the improvements in case selection and treatments that come from that. With machine learning AI built on top of that, which is what they're working toward now, they'll be able to make those adjustments and improvements in a matter of weeks and months, not months and years. And so if you're a customer of the IRS on the collection side, you're going to see collection faster. You will go through the process much more quickly than anything you see in examination or appeals. So you really need to have a solid tax representation backing you up when you work with collection who knows the process, because it doesn't get better with age. It happens very quickly.
You're right, Darren. I mean, I had no reduction in work during the shutdown. In fact, I never had problems getting through to the IRS. There was always somebody there to answer the phone and talk to me about some collection issue. They did not stop collection during that time. And I suspect that what we're going to see from now forward is an increase in that automated collection system, because it is so financially beneficial for the IRS to utilize computers and boilerplate letters that they send out to our clients. But it's not great for our clients, not great for the taxpayer, and actually creates quite a headache for them because they can't always quickly resolve it before they're being penalized for something they didn't even do.
Yeah, I mean, this has just been truly fascinating. And I want to thank you both for joining us, and everyone here for joining us as well. Think about, we're going to have some follow-up webinars as relates to what's happening from within the courts, tax courts, collection, creative collection activities. I've seen Gary speak about that on some other occasions. So, we'll have that forthcoming, in addition to use different scams, 401k scam that is out there. But thank you very much for joining us today, and look forward to our future webinars as well.